So you're sitting in a sovereign debt crisis. That the S&P 500 is probably down 40% over the last 10 years. Right, when you remove risk from an ecosystem, the ecosystem breaks. 85% of the market is passive and quant right now. There's no humans left in markets. So irresponsibility is being rewarded in this market, and fiat systems don't die from debt. They die when trust collapses. Running to cash during a sovereign debt crisis is like running into the fire doused in kerosene.
Welcome back to Verified Market Insiders. Today, we're diving into what may be one of the most overlooked risks in the entire financial system. Joining me is Chris Galizio, CFA and former Fidelity portfolio manager, who once oversaw roughly $7 billion in assets. But over time, Chris says he's started seeing cracks beneath the surface of the system itself. He's the author of a provocative white paper, The $340 Trillion Problem, executive producer of the award-winning film Money Game. Today, we're going to be talking about growing stress in the silver market, big lie, passive investing, and why inflation looks completely different. Chris, thank you so much for joining us.
Thanks for having me on, Liz. I'm happy to be back. I interviewed last time with Emmett, did a great job, and I'm looking forward to talking with you for the first time.
Yeah, well, listen, these markets, what a run. I mean, I want to start off with this because it's a big topic of what's been going on over the last not several days, but several weeks it feels like. I mean, we just will not stop running up. We're in a conflict overseas. Oil prices sure are dropping, but what is going on here? Why are we seeing this extended move? I mean, we're looking at a historic move. It doesn't make sense to me.
So you're sitting in a sovereign debt crisis. It's why I made the movie Money Game. The last financial crisis was a financial crisis, and stocks fell. But during a sovereign debt crisis, what happens is the currency is falling. Right. So if you notice, the price of gold has been going through the moon. So if you actually priced the stock market in gold terms, which is as if we were on the gold standard back in the day, you'd see that the S&P 500 is probably down 40% over the last 10 years. So if you actually priced it correctly in gold terms and not in dollar terms, you'd see that that it's falling. What you're seeing is it really a debt illusion, right? Stocks are going up because inflation is going up, right? During a sovereign debt crisis, if you look at countries most recently, like Venezuela had a sovereign debt crisis, stock markets went straight up because the currency fell, right? Your coffee went from $3 to $30, which is effectively what you're watching today in the U.S. And we also had the same thing in Egypt more recently, and Argentina. One day in Argentina, they cut the currency by 51% over a weekend. All of a sudden, stocks went up. So stocks go up during a sovereign debt crisis because the currency is falling.
Well, I do want to talk about gold for a second here because one of your arguments is that the S&P 500 is actually losing value when measured against gold. So if you were managing money today, would you completely avoid equities, or are there just still specific real asset sectors like precious metal miners that could still function inside what you would see as a broken system?
So again, in the movie, what we advise people we're not advising people; it's a real movie. But James asks Bryson, "What should a guy like me do?" And Professor Gardner says, "Buy real assets, buy gold, buy silver, buy copper, buy shipping companies. Anything that's real retains its value." The most interesting thing I think what you're watching is one of the points about Money Game is when you remove risk from an ecosystem, the ecosystem changes, right? It shifts in what you're seeing in markets is markets shifted from humans running things to passive and quant, right? In the movie, we say it's a bunch of followers following follows like a cat chasing its tail, right? There's no price discovery in markets. Prices are going up, but it's going up for the wrong reasons. I mean, look at a company like Intel more recently. Intel just put up a quarter of they grew their top line at 6%, inflation adjusted. That's probably really zero. They lost $4 billion for the quarter. Stock went up $150 billion. How can that be? How can a stock go from 400 billion to a 550 billion, and when their quarter was irrelevant? Well, I think what's happening is companies are going up because they're issuing shares. So they're actually going up for the wrong reasons. The ecosystem's broken, right? When you remove risk from an ecosystem, the ecosystem breaks. It's like seeing, and so everything shifts to passive. Think about it as it shifts to like is all gazelle. If you look out your window today, everyone's gazelle. Nobody's thinking anymore. Nobody's pricing stocks. So stocks are actually going up for the wrong reasons. If you think about it, if 100% of the market is passive, who makes the adjustments? Who picks the stocks? And the answer is nobody, right? So if a company issues shares, the passives are forced to buy at the quarter because they have to match the number of shares that are out there. So it's actually going up for the wrong reasons. Isn't that amazing? I mean, fiat currencies break not because of debt; they break because trust collapses. And I think you're seeing trust collapse across the board. Things like GameStop is another one, right? Nobody goes to GameStop. Nobody buys their games at GameStop. It's a $10 billion company that loses money, and went into crypto. Why did the stock go up? Because they were issuing shares. Same as MicroStrategy. MicroStrategy was one of the best performing stocks because they keep issuing shares to buy Bitcoin. It's not because of Bitcoin. It's because they're issuing shares to buy Bitcoin. So I think the ecosystem of capitalism is broken, and that's the biggest point of the movie.
Yeah, and that's really interesting that you say that because, like, issuing shares to me sounds kinda like I mean, maybe I'm off here, but it almost sounds like a dilution, like a pushing in of monetary into a monetary system that, that is not naturally, pushed
Sure.
into. So, for example, kinda like, QE almost. But what is interesting to me about what about these stocks, like Intel, you said, like GameStop? They're issuing shares, and that's the reason they continue going up, as you say. But, a lot of times we look at the broader economy, just AI in general, or GameStop just I mean, that's a, meme stock in itself. But, like, let's look at Intel, for example. They have the earnings they missed, sure, but they continue growing in revenue. Why is it then that the outlook would be so important? I mean, sure, issuing shares pushes up, but from my point of view, I see, okay, well, the outlook, they promise X, Y, and Z. So my s my view of it is that we're basically betting on what they are saying, "Hey, this is what the future is gonna look like."
So that's what I don't believe. I don't believe it's going up because of the future.
Okay.
I believe it when if you look at the share count, their share count grew 20%.
Mhm.
So passives had to match the quarter, right? So they had to increase their shares by 20%. So what I'm saying is the ecosystem is broken. It's all passive. 85% of the market is passive and quant right now. There's no humans left in markets. There's no price discovery, right? So stocks are going up for the wrong reason. So everyone's believing that Intel's going up because of future expectations. But you're right. If you saw a company report a quarter of 6% growth, and by the way, their revenues over the last 6, 7 years have gone from 70 billion to 55 billion. So they've consistently gone down for 10 years, right? Would you all of a sudden hear a CEO speak and all of a sudden reprice by 150 billion? That's not rational. It doesn't make any sense. That wouldn't have happened, right? I'd want you to prove it to me. So I don't believe it's going up because of the future. I believe it's going up because they're issuing shares. And you're right, that's dilution. So what you're seeing companies be rewarded for the wrong things. You should be rewarding companies for buying back shares. And actually, the opposite is true there, right? And if you have to think about what the ecosystem is, and that's the point of money game. The ecosystem is broken. It's all passive and quant. There's no humans. It's a bunch of followers following followers, got cat chasing its tail. Is how we say it in money game, right? So we're trying to describe to you a market that doesn't make sense. The opening quote in money game: the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees. Because we're all seeing stocks that don't make sense. You're seeing Intel fly. You're seeing Palantir earned 1 billion last year. One quarter they gave away $28 billion. It'll take them 28 years to get back the amount of shares they gave away last quarter. So the system is now rewarding companies that issue shares. The ecosystem changed. It's a financing system that rewards companies that need financing, not companies that make profit. And that is very complex. But I think once you see it, it's impossible to unsee it. If you think about all of tech's the best performer, right? Um, why? Because they issue shares every quarter, right? And in a passive world, you're actually being rewarded for being irresponsible. Like GameStop right now is bidding for a $10 billion company is bidding for a $50 billion company, and they're telling you how can a $10 billion company buy a $50 billion company? The math doesn't add up. right? They have a bond from TD Bank, which I can't believe TD would give them 20 billion.
A
Um,
confident bond too,
Correct. So they
which
have
yeah.
a $20 billion bond plus a $10 billion market cap, and they're trying to buy something for 50 billion. And then the CEO is telling, well, we're going to issue shares to get it. Right, free money. Right. So the most irresponsible companies are going up the most. And I can give you examples on the other side. Companies that pay dividends and buy back shares are going down the most. So things are stuck. So prices are working opposite of fundamentals. And that's, by the way, why only 22% of fund managers beat the market last year, because they're all using math. And the system isn't rewarding math any longer.
That is wild, and I am familiar with the GameStop. I mean, as familiar as you can be with the GameStop, trying to buy, eBay, which was interesting about that, and that's why dilution came to my mind earlier, right? Because, you know, for example, a smaller company trying to buy a bigger company is off saying that, "Hey, I will reward shareholders because I'll be issuing shares," but really, again, that's dilution, so in
Correct.
the long run, it doesn't seem like that actually pays off, which is kind of wild in itself, but at
Correct.
what point does at what point in this market are we gonna see price discovery finally come back in? When are we gonna see all of this stop being rewarded for being, just pushed up for, I mean, weeks now?
So I think it's a fiat system, right? We're living in the fiat system. Fiat systems don't die from debt; they die when trust collapses, right?
Mm,
So everything's being rewarded for the wrong reasons, and that is such a big topic. Like, if you take the reverse side of that, I owned a company called ZimCorp. It's a shipping company. It traded as low as $6. The next quarter, not year, the next quarter, they earned $9.34. Right? So it's trading at 0.25 times earnings. Why? Because they were paying massive dividends. And if you think about it, if you believe my thesis, at the X date, it would actually it would if the stock was trading at say $10 and they paid a $3 dividend, it would fall to 7. But it would force the passives to sell because there's fewer shares, right? So it actually would sell it down. So I think things are not only working disconnected, but things are working opposite of fundamentals. It's also why tech has outperformed by so much. Because if you think about all those tech companies paying stock options, Intel, for instance, this quarter, Intel had a cash flow from operations of 1 billion. Okay, but 662 million of that came from stock options, which is actually paying employees. So you're actually it's tax benefit of stock options. They basically earned about $300 million. Think about that, $300 million. CapEx was 3.6 billion. So they have a negative free cash flow of 3.3 billion, and the stock went up 150 billion. Right? Stocks are working opposite of fundamentals. The closing quote of Money Game is if passive ever gets bigger than active, there'll be chaos and catastrophe. Our markets will fail. What you're watching is markets are failing. And by the way, that was the quote was from Jack Bogle, founder of Passive. And now passive is 65% of markets, and then quant's another 20. That's the real issue. The structure of markets is broken. And so all that's happening is the Fed's printing money. Money flows to the index. Nobody's even thinking. Think about how it's a financing system. It's not an investing system anymore, right? So there's no return from cash flow. I mean, Intel has no cash flow. If you look at a company like Boeing, Boeing has lost 10 billion every single year for 10 years, pretty much, just off and on. But they haven't earned a profit since 2016. So what's keeping it in float? Well, they're issuing shares, right? So it's a financing system. That's also, think about all the zombie corps we have out there. So zombie corps actually during COVID, zombie corps actually outperformed, right? Because as they issued shares, money flowed to the zombies. They were issuing more shares. Stocks went up. We talk about it in Money Game. We talk about Live Nation. They kind of point at CNBC. They look up at CNBC and say, "What's that stock?" The stock's going through the moon. What's Live Nation? Is what we basically effectively saying. Um, Live Nation was concerts. Concerts were down 95% during COVID because there was no one going to concerts, right?
Mhm.
Stock was doubling. It was doubling from its peak, not from its bottom, doubling from its peak. So things are the more the Fed intervenes, the more stocks disconnect, the slower the growth in the real economy, which is the theme of the movie, right? At the closing quote in Money Game is our system's broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economy as you misallocate resources. Now we have two different economies: the financial economy and the real economy that no longer work together. Money printing doesn't create wealth. wealth is created by all your hard work. So the more the Fed intervenes, the more it becomes not capitalism, the more stocks disconnect, the slower the growth in the real economy. So how does it end up ending? It ends with a currency crash.
A currency crash.
Correct. Like Venezuela, like Egypt, like Argentina, in the U.S. and the EU
Wow.
together. I know.
Yeah, that would be catastrophic on so many levels,
Right.
a currency crash.
You-
Um,
You're already watching it. Just watch the price of gold. Right? Silver went from $12, now it's 82, I think. At one point, silver hit 120. Where's the panic? Where are people saying, "Oh my God, the currency's crashing"? I think what you're also watching is on places like CNBC. That's a propaganda network. They're never going to tell you. They're never going to show you the price of the S&P 500 in gold terms, right? If you notice on CNBC, they only talk about price with the built-in belief that markets are efficient, right? Professor Garden in Money Game will raise the book, The Efficient Market Thesis. He throws it in the trash. He goes, smart people thought the world was flat once too, right? So you're living in this groupthink. It's the biggest groupthink, in my opinion, in financial markets history. And that's why I made the movie, to try to point out, if in Money Game, as you're watching it, they keep asking Bryson. Bryson's the CEO of the next big thing, Snapchat, TikTok, whatever, Elon Musk, however you want to say it. And they keep asking Bryson, but how does your company make money? Right? And the answer is, it doesn't make money. They lose money. And what you'll hear Bryson say is, nobody gives a shit about profits. Half the time, the investors don't even look at the prospectus because they're passive, right? So we try to point it out without using technical language, is what we're trying to do in Money Game.
yeah, that's really interesting. It sounds like, I mean, I just keep going back to these tech companies that just will not stop running. I mean,
Correct.
NVIDIA being one of them. You know, it all seems like hopes and dreams is all that we're betting on, and then if you've got cash flow, it continues pushing that up, and then they're not making money, and then at some point, that scale has gotta tip.
Correct.
Um, yeah,
I mean,
I do
look,
wanna talk about I wanna switch gears a little bit here, talk about COMEX, fractional reserve theory. 'Cause
100%.
you've talked about China's export restrictions as part of a broader attempt to kind of force what you describe as a run on the banks for physical silver. So,
Correct.
if COMEX were ever pushed into a force majeure and situation, I mean, what does that next day look like for the average retail investor holding on to paper silver ETFs instead of the physical metal?
Well, so so this is why you can't hold the paper contracts, because what they're going to do is they're going to say, "Oh, we owed you $80. Here's $80 in cash." But the silver is now 160. So basically, they stole your money, right? So you really can't hold the paper contract. As a matter of fact, at one point you were seeing silver at, say, 80, and the Hong Kong silver price was 100. If you actually wanted to buy it, you're paying 110. So if you walk into a Toyota dealership, if there's an ad that says, "Hey, Toyota's $10,000," and then you walk in there and you can't buy it for 10,000, well, the real price isn't 10,000; it's 40,000. So there's also a gap between the real price. I mean, my belief is the markets are being manipulated. Um, that's the money game, right? As interest rates fall, asset prices rise. If interest rates go negative, like they are today in real terms, because I would argue interest rates are 4%, inflation's probably 10. Look at oil; it's 95, so it's a -6. When interest rates go negative, all assets are worth infinite. My coffee is worth infinite. My desk is worth infinite. My whiteboard's worth infinite. Does that make sense? And so that's what you're basically trying to point out. This system is a Ponzi scheme, right? They're manipulating interest rates, which is the money game, to below inflation, and assets are going to infinite. And that's what you're watching until trust in the system collapses. Then you'll see price discovery again, which, by the way, is a return to capitalism. Now the system will start to allocate scarce resources again, right? That's the theme of Money Game. Capitalism requires risk to allocate scarce resources. So when you remove risk, QE, it's not capitalism anymore, right? I saw today, I just saw a headline that Trump is going to meet with President Xi in China, and he's bringing the
Mhm.
Boeing CEO, right? Because it's not a capitalist system. Like Ayn Rand said, capitalism with government help is the worst type of economic phenomenon, because it's not capitalism anymore. It's governments picking winners and losers, and that's what you're watching.
That is very wild. Alright, so let's talk about something else that I want to follow up from last interview as well, because you warned that most people still don't realize that post 2008 bail-in laws exist. This is interesting to me, where depositor funds can potentially be used to stabilize a financial institution. So, in your view, how close are we to seeing a major institution in the U.S. or I mean even Europe actually test those rules? And like, what's the earliest warning signs that some of these depositors should be really alerted to?
I mean, the earliest warning sign was when they put in the law that they can bail you in. They're telling you at some point, we're going to bail you in. Like if you put money in the bank, the money isn't yours; it's the bank's money, right? So if there's struggles, they can bail you in. And by the way, FDIC covers less than 1% of deposits out there. It's way less. I don't know exactly the number off the top of my head, but it's way less than 1%. So if everyone actually asked for their deposit at the same time, there's no way you can protect it, right? I actually think the manipulation of silver. I think a lot of companies, a lot of these big banks, were shorting silver to artificially manipulate it lower, right? I mean, so I think they were stuck, and at 120, there was some real strains. And I think what they did was they manipulated the price back. They did, and just think about what the CME did. They were increased reserve requirements, right? So the price of silver hit 120. They kept in three. I know in 1 week they increased reserve requirements 3 times, which forces a paper buyer to sell if you're on leverage, right? So what that did was effectively force the price back down. So because I think what was happening is the banks were shorted, and you're going to see it. That were a couple of banks were going to, show massive losses, and I think so. I think the system was right on the verge at that point, and so I think it's just a matter of time now.
Do you think that there'll be a situation where everyone needs to run to the bank and they'll find that, "Oh, no, there's not enough money to cover everyone's funds that are there?"
Well, that's what they designed the system for, right? So they're not trying to protect the individual; they're trying to protect the bank. They're trying to
Right.
protect the system. And think about just basic stuff like if you work for a new company, they're going to give you a bunch of new stocks to buy, and they're going to give you the S&P, is there a growth fund, a value fund, whatever, um, and they're not asking you to think. Nobody's thinking anymore, right? Nobody's picking individual stocks. They're buying ETFs, right? So no one's sorting between a good stock and a bad stock. There's no price discovery in markets, right? That is a massive topic. And so if you think about that, it's a financing system. They don't want you to think. They just want you to finance Boeing because somebody has to finance Boeing, right? Somebody has this is a financing system. It's not an investing system. Think about the best performer for multiple years was MicroStrategy, right? It was crushing the market. Look at their business. It's a zombie corp, right? So where did MicroStrategy get their money to buy all that Bitcoin? They were issuing shares. So every time they issued shares, my belief, when you issue shares, stock price goes up, not down, even though it's dilution, right?
Mm.
So irresponsibility is being rewarded in this market, and it kept going up. Then on top of that, they used that money and put it into Bitcoin. So it's the same thing that GameStop's doing today. They're saying we're going to issue shares. Well, that's dilution. In a capitalist system, that should hammer the stock price, right? It's actually rewarding the stock prices, which gets to my thesis that it's an investing system, not a financing. I'm sorry, it's a financing system, not an investing system anymore. The ecosystem changed when the Fed removed risk. QE.
So when you, have something like MicroStrategy's that's, as you say, a zombie corp for because they bought Bitcoin, sold shares, their price goes up. What happens when Bitcoin if Bitcoin, I'm not saying one way or the other, let's say it comes crashing down, does that mean that MicroStrategy is just, I mean, 3
No,
times really?
because MicroStrategy wasn't my belief. MicroStrategy was never going up because of the Bitcoin. It was going up because they were issuing shares to buy Bitcoin, right? So in this market, if you issue shares, GameStop, Intel recently, um, Palantir, right? Those companies aren't going up because the people are predicting in the future. I don't think it's people anymore. I think it's all machines. It's a bunch of followers following followers, like a cat chasing its tail. And it gets back to the closing quote: if passive ever gets bigger than active, there'll be chaos and catastrophe, our markets will fail. From Jack Bogle, the founder of Passive, right? That was 2017. So here we are. Passive is much bigger than active. There is no price discovery. All that's happening is the Fed has, if you notice, the money supply has gone to 23 billion now, or 23, yes, 23 billion. So Um, so, so all that's happening is the Fed's printing money, it's flowing to indexes, and stocks are disconnected from fundamentals, right? It's a fiat system, and that's why nobody's beating the market because they're all using math.
Yeah, and I do wanna ask you, I wanna go back to your bail-ins because you said something interesting, it's the survival of the institution over the depositor, right? So,
Yes.
do central bank digital currencies become, like, the final layer of some of that control? Especially a digital barrier basically designed to stop the kind of bank runs like in China, Mexico, we're trying to avoid.
See, I don't see how central bank digital currencies change anything. I mean,
Yeah.
they still control the money supply. There's actually a quote from Mayor Rothschild. If you give me the control of money supply, I care not who makes the laws. Right. So it's actually my belief is it's the Fed that is controlling everything right now, but in their control through controlling interest rates. They're manipulating interest rates lower. But when you manipulate interest rates lower, you're sending the wrong price signals, by the way, to markets, right? I mean, interest rates should be going. I mean, think of all those things. Like crowding out is one of those things that should happen. If the governments get really big, don't you get crowding out? Doesn't interest rates go up? Well, they prevented that from happening, right? So what ended up happening is stocks began to disconnect from fundamentals. And my belief is the ecosystem changed. It shifted from an investing system to a financing system. By the way, if you want to buy some of these golds and silver and oil stocks, notice some of these companies are trading at 2, 3, 4 times earnings. Would you rather get your money back in 4 years, or 2 years, or 3 years, or 100? Like Palantir. Or Intel, I don't even understand how anyone would ever buy that. And there's no words that would make a person buy that. It's not the CEO, a CEO with a company whose sales went from 70 billion to 55 for the last 10 years, all of a sudden speaks and says, "Oh my God, our growth's going to be great in the future," and all of a sudden we're going to run the stock up by 160 billion. I don't believe that. I think it's because the entire system is passive quant.
That is very interesting. Yeah, because I mean, every day we're in the charts, like, who would be buying at these
Correct.
levels? This is nuts, but it just keeps going up. You're right.
Correct. And so the other thing to look at is it's Triffin's dilemma, right? So the U.S. has to run deficits, and it has to finance those deficits. So if you look at the net international investment position of the U.S. versus the world, right? We have a net. The world owns $28 trillion of U.S. more than we own of their stuff. So it's the net. That's the accumulated capital account is $28 trillion. In during 1998, it was probably 3% of US GDP. Now it's 83% of US GDP, right? If that reverses, um, so the governor that controls imbalances in the economy is currency. So if your trade if you have a massive trade imbalances, so if your capital account and your current account are what are your if they're not equal, right? We know we run massive current accounts, right? Our capital account has been negative, has been positive. Why hasn't the currency collapsed with huge trade deficits, right? It's because the money has flown into the capital account, right? So and that's the $28 trillion that I'm referring to. If that 28 trillion starts to flow out, there's no way to balance of payments anymore, right? Without a currency crash, and that's Triffin's dilemma, and that's effectively what the movie is.
I have one final question for you, Chris. I mean, this has been a very interesting conversation, but it is kind of related to your film because for people who are not familiar, I mean, in your film, the character James represents the like real economy, the average person trying to survive inside the system, right? So, if James asked you today how to protect his family's future without access to some of these elite financial tools or insider networks trading, what's the single most important, maybe non-financial asset he should be focusing on acquiring right now?
So real assets, right?
Okay.
So buy real. That the irony here is a company that buys back its shares goes down in this environment, right? Has been going down. So you can buy a company like Petrobras. So Petrobras is a good example because it's an oil company. We're in an oil crisis, right? You would think that oil companies would be through the moon, right? Petrobras trades at 3 times trailing free cash flow. So why would a company? Because the system isn't thinking anymore. As a matter of fact, at the end of Money Game, as the credits roll, you'll see a lion. The lion is you. It's returning. The lion's returning, and thinking again, right? So stop believing the experts. Like people like Bill Ackman and these hedge fund managers don't understand what's happening. So they're out there buying these companies, trying to get the trying to they're buying Intel. Oh my God, look, Intel's going up. If you're smart, just think for yourself, right? Be a lion. And go buy Petrobras at 3 times earnings. Go buy Nexa, which is a silver company trading at 5 times earnings. I saw B2 Gold just grew, their top line revenue growth was 120%. They doubled production. Stocks at 5 times earnings, right? Why are we even playing with all those companies? First of all, just buy real assets. Real assets are incredibly cheap today.
I mean, real assets as in commodities, but I mean, that means land as well, right? Or, or even having, basic skills like, I mean, basic labor skills, I guess. Would you say
Correct.
that as well?
I mean, the first thing you want to invest in is yourself. So think of
True.
the yields of these buying. I mean, think of the yield in Intel. Intel cash flow from operations, not even free cash flow, was 1 billion. The company trades at 455 billion. So you're going to get your money back in 455 years at today's rate. You better be Moses if you think your money and live 800 years if you want to get that money back. Right? Stocks are disconnected from fundamentals. So stop believing the experts. The experts don't understand what's happening. It's a sovereign debt crisis. As a matter of fact, look at Warren Buffett. Warren Buffett has a ton of his money. I can't remember the exact number in cash. During a sovereign debt crisis, cash is a melting ice cube, right? So here you are, the smartest investor in the world during a sovereign debt crisis, when the government can't pay back its debt. We have $40 trillion in debt that's unpayable. The Globe, like I had a white paper that I wrote, the $340 trillion problem. We all know that debt is unpayable. If debt's unpayable, then currency is worthless. And he's buying currency. The smartest investor in the world, who's been chasing cash and stocks his whole life, during a sovereign debt crisis, ran to cash. Running to cash during a sovereign debt crisis is like running into the fire doused in kerosene.
That is interesting.
That's the worst.
That's
That's the worst place you can run.
That's the worst place you can run. That's right. Well, Chris, I have so many more questions, but we're gonna have to get you back on. That's just round 3, right?
No worries, Liz. I'll do it anytime. Happy to do it.
Listen, Chris, for people who, maybe wanna follow you and, some of your ideas that you have, where can they find you?
So if you want to follow me, look under Chris Galizio, Galizio, on LinkedIn. I talk to people all the time. I post all the time. You can find Money Game on Amazon or Tubi, and it's free. So it's ads as long as you don't mind watching the ads. And if you contact me, I'll be happy to get back to you.
Chris, thank you so much for being here. Really appreciate it.
Thanks, Liz.